thank you for joining us for our third Thursday themes conversation for this month. And we are pleased to be joined by Ian Charles from Arctos Sports Partners. Arctos Partners has done an amazing job in the world of professional sports, and they have some other business lines as well. But when we look specifically at this conversation, we're going to emphasize and really talk about sports primarily because it's very much of a hot topic today. So, Ian, obviously you do multiple things, and we'll talk more about sports, but give us an overview of the firm, its strategy, and what the theme is that you're focused on at this time.
Arctos really does three things. We provide growth capital and liquidity solutions to other private markets firms in some really creative ways. We call that our keystone strategy. We provide growth capital and liquidity to the premier owners in sports. That's the Arctos sports strategy. And then we serve both of those strategies and industries with a very powerful data science business called Arctos Insights. It's really more about applied research and understanding the fundamental drivers of those two industries in a really unique way. So those are the three lines of business that we have at Arctos. And I think the theme that we're talking about today is investing in sports, and predominantly North American sports, which is the strategy that we founded the firm on 4 years ago.
And so when we think about the theme around it, we've talked about this quite a bit. Owning professional sports teams in itself is a way to reach audiences. We've looked at it from the standpoint of the change in consumer behavior, particularly around cord cutting and things of that nature. Obviously, that's part of the strategy. Or is there another theme that you consider to be really important for the audience to be able to think about of why professional sports is a great way to benefit from that trend, from that theme?
Yeah, look, I think the overarching theme is how powerful and multi-generational these brands are to their consumer. Remember, in sports, the consumer has a unique name. They're called a fanatic. The customer acquisition cost is usually quite low because it's your family's team or your local town's team, and you just sort of become immersed in consuming this entertainment in all of its forms. How that content gets consumed changes over time. But sports is, we think, the most interesting play in what is now called kind of the consumption transition to live entertainment and experiences, the transition from traditional media platforms to streaming platforms, and the implementation of some of the advances in things like augmented reality. And sports gives you one way to play those big, broad-based themes in North America with a resiliency, durability, and predictability that is highly unusual in the investing world.
No, it really is a sticky customer, which is every business's dream. Yep. And as you put it, they're a fanatic, a fan, and there are many people, regardless of where they move to, regardless of if they live in another country, they still are following that team that they loved and were passionate about when they were children. So when we think about the investment side of professional sports, as a firm, we always talk about the downside first. If we could live with the worst case scenario, the upside takes care of itself. So when somebody owns a professional sports team, what is the worst case scenario? And how does that ultimately manifest itself? And what is your approach to mitigate that?
Yeah, in the North American sports leagues, I think of the biggest downside risks. There's sort of a fundamental risk for the industry, which is really around the consumer's interest in live entertainment and experiences. And then fundamentally, do Americans enjoy consuming sports as a form of content? Those are risks that can be triggered through a thing like we weren't creative enough to anticipate the fallout of a global pandemic, right? But I think it would be very hard to argue, if you look at travel, leisure, and other forms of live entertainment, that sports did not have the fastest, strongest recovery to the COVID-19 pandemic. So I think the durability of North American sports to weather that kind of shock is pretty remarkable. Other risks or downsides that I think are uniquely applicable in sport is the national media deals that each of the leagues negotiate. And from time to time, the collective bargaining that they go through with the players' unions. Those risks have largely been mitigated in North America. Each of the leagues in North America either has recently negotiated their long-term national TV deals or are in the process of doing that right now, which is the case in the NBA. How we manage those risks for our investors is through asset selection, right? Owner quality, attractive entry prices, and then downside protection through structure to try to mitigate or eliminate our portfolio's exposure to some of those risks.
When we think about, the theme itself, every theme, it's kind of interesting because most people want a theme to be a linear, just straight up to the right, and of course, nothing is really straight up to the right. It's some form of stair step or sometimes a little bit of a sine wave, if you will. But so what's the biggest headwind facing the theme or facing the strategy of professional sports, right now?
It's a great question, and this is an industry that is not really pro-cyclical or counter-cyclical. We use the word anti-cyclical. It kind of just is what it is, right? 80% of the revenue in North American sports is long-term contracted with escalators. Think about those media rights and long-term sponsorship deals. And so you do have this almost real asset-like predictability to a big part of the revenue structure. But some of the headwinds that face sports, if you had a very large, elongated recession in the US, that has to impact consumers. During the GFC from 2008 to 2010, North American sports, each of the leagues grew ticketing revenue and local revenue year over year, 2008 all the way through into 2011. Now, the growth rate wasn't what people had thought it might be if you look back in 2007, but they've continued to find ways to grow. Another headwind that's facing some of the North American sports leagues is the disruption that is taking place in local media rights with regional sports networks. And this is an acute challenge for the National Hockey League, the NBA, and Major League Baseball, where a lot of their inventory is broadcast at the local level. That disruption is a short-term headwind. We actually think it's a long-term tailwind because the leagues now have an opportunity to bring that local content back into a centralized kind of auction process and create more national packages for those traditional and streaming media partners. So those are the headwinds that this industry faces. A deep, long recession could slow the growth of these businesses, and the disruption in local media rights is a near-term, short-term headwind that we think actually is a long-term upside opportunity for North American sports.
Well, you used the term tailwind, so I'll borrow that. And so to get a little bit more optimistic, and clearly you believe in the theme and believe in professional sports in North America, what is the biggest tailwind? What is the biggest, gale force that is behind these businesses?
Yeah, look, I think there's a couple of tailwinds that are driving this. As the U.S. consumer has sort of shifted from consuming things to consuming services and experiences, the live entertainment, appointment viewing economy that is live sports, the communal experience of watching these sporting events together in the venue or just in the community, through whatever your streaming platform or your television. The growth that we see in average ticket prices, in ratings data, in fan engagement today versus 2019 with that shift, it's very powerful. And if you don't have a deep, prolonged recession, the opportunity for the leagues and the teams to continue to monetize that trend in really creative ways is a huge tailwind. The other thing that I think is not obvious to everyone is how important this content is for the major media platforms, whether they're traditional or streaming. This content has to be consumed live. And that makes it critical for the linear television platforms, but it also makes it very valuable to the streaming platforms who are trying to figure out how to manage customer churn rates and attract new subscribers to their platforms. You can almost think of sports as the bond allocation in a content portfolio for one of these streaming platforms. It delivers regular, durable, predictable subscribers that won't binge watch and then cancel. And the power that the leagues have with this content in that competitive kind of bidding cycle between the traditional and the streaming platforms is really powerful, and something that's going to be advantageous to the owners of this IP for a very long time.
Yeah, you made a couple of comments about things that were great tailwinds, but when you think about, what we could refer to as a firm, define what matters here, what are you most excited about in the theme and the ownership of professional sports, or things that people may not fully appreciate that could surprise them on the upside?
Like an upside node, there's a couple of upside nodes that people aren't seeing right now. A lot of people talk about the impact of legalized gambling on engagement and fandom and ratings, and that definitely is an upside node. But I think big moonshot stuff that people aren't paying attention to, the leagues and their partners are very quickly going to be able to start to provide you in your home with an experience that feels like you're in the building, whether that's through augmented reality or in-game participation, where you for an upcharge, you and your kid could be grafted onto players in the game real time on your TV with no lag. And so you're actually playing catch with your kid to get them locked in to watching the games with you. There's so many unique ways to repackage and distribute this content in a very targeted, customer specific way that most people don't see today, but it's coming in lots of different forms and delivery methods. And that's going to be very exciting.
It's fascinating to think about when I was a child watching a football game on TV or a baseball game on TV, and just the way that was done then, and how technology and certainly high-speed internet and streaming and those kinds of things, and massive better cameras and those just improvements over time is totally changing the experience for a consumer and for a fan to be able to do that. At the same time, what they've done in the building to get people to want to go to actually the game itself and have that entirely different experience. I went to one football game, this year live, and they had a drone show, they had fireworks, they had music that normally is good, but I mean it was like crazy good, and it was like, this is a lot more fun than just going to a football game, which is obviously something I enjoy, but this is a completely different experience. So they're doing a good job of reaching the consumer. And it's not just the sleepy industry that it used to be.
No, it's becoming a very sophisticated live entertainment kind of consumer engagement platform that has all kinds of other nodes around real estate and kind of digital marketing. It's a really unique platform.
So, this is obviously a loaded question, but it's a question I think the audience would benefit from hearing. On a scale of 1 to 7, with 7 being the absolute best. I mean, obviously you like this theme, but every theme, just like we were talking about, gets more expensive, less expensive, better risk reward, less risk reward. When you think about what you're seeing in the market daily today, on a scale of 1 to 7, where's the risk reward in the theme and in the space today?
Well, one of the things we haven't touched on that you and I have touched on in a bunch of our prior conversations, the North American sports leagues limit institutional capital, and they limit the use of leverage, and they've built these very robust, durable businesses. Because of those things, I would actually say that on a scale of 1 to 7, if that's kind of what more traditional asset classes I would say that structurally, the North American leagues have by design created their own scale that can't really move between, really get lower than a 3, but it probably also can't get better than a 6, right? Just because of how locked in and contracted these businesses are. In that scale, I think today's risk reward opportunity is sort of a 5.5 or a 6. It's very, very attractive. But it also can't move around to the extreme 7, but also the downside kind of 1s and 2s. Does that make sense?
Sure, it does. And it's something that leads to the next question, which is when we talk to people about sports, there is an immediate predisposition of what people think about the business of owning a professional sports team. There's lots of different things that we could talk about. Well, what do you think are that most people are getting wrong, are not fully appreciating enough about this trend and about the ownership of professional sports teams?
And again, I try to say it every time, but my language is very intentional. We're very focused on the North American leagues and their clubs because there's a very unique structure of those businesses here in North America. And one of the things that I don't think people appreciate is how beautiful that structure is. Every North American club, no matter which league, owns at least 3 things. They own an equal pro rata share of their league, and the leagues are global intellectual property businesses. They're monetizing this content and these brands in many markets through many different kinds of contracts that are very long duration, spread with really no customer concentration risk. It is sort of an investment grade like cash flowing business that you own that is a piece of the league. Then you have a local protected kind of region, it's monopolistic like, where no one's really allowed to compete with you in your form of live entertainment in a region that might be just a city, but it could be as big as 7 or 8 states. And you can use that license as a platform to build a live entertainment business or a real estate portfolio, be a civic leader, right? And then the third thing that you always get is a tax shield, very similar to the GP stakes tax shield for ordinary income. And so when you aggregate those 3 things, that is the asset you're buying when you invest in North American sports. A piece of the league, this local franchise, and everything that comes with it, and the tax shield. And each of those pieces are valued in very unique ways, but it's a sum of the parts. And in a market that is early in its institutionalization, there's a lot of opportunity to be a value-added partner and deliver a very attractive risk return for the investors.
It's definitely something that most people I would say, do not fully appreciate the ownership of the league. I hear that more than anything else. Oh, I didn't realize that if you're last or first, you get the same profit sharing regardless. Now, over time, you need to win, but you get the same economics.
That's exactly right. And that's not true outside of North America, right? You've got things like relegation and payments tied to performance, and it's a much more volatile, performance dependent outcome. And that's not the case.
And the leadership of the leagues in North America, I think, deserve a lot of credit for thinking through the business model and all the ripple effects from what they learned from other leagues that maybe have had more volatility, both for the owners, but also for the players and also for the fans as a result of that. So the last question I'll ask before we wrap up here is, no one is going to sit there and say that there's not a place for traditional investments or traditional asset classes in a portfolio, but make a case, if you would, of why you believe owning these assets, professional sports teams, primarily in North America, is a better alternative for people than traditional asset classes.
I'm going to change one word there. I think it's complementary, not necessarily an alternative. These businesses and this industry has proven a very unique resiliency. Okay? In really good economic environments, really constrained economic environments. really accommodating capital markets, really choppy capital markets. If you had no skill as an investor in North American sports, you just sort of were able to buy the market during the most accommodating decade of my career, 2011 to 2021, when venture capital and buyout funds would have given you like a 17 to a 20% pooled average return. North American sports gave you an 18. Again, with very little or no leverage, very low volatility, no drawdown risk, right? During a very different period, again, with no skill as an investor, you're sort of buying the market from the mid 60s to the mid 80s. The S&P 500 did not deliver a return over those 20 years higher than inflation. You actually lost real wealth being long equities. The 60-40 portfolio didn't work very well for those 20 years. North American sports generated a 16% compounded return. And so what I think this asset class provides is a very unique opportunity to be a return enhancer to a diversified portfolio, but also a risk reducer because it has low vol and lower negative correlation. And it's really unique to find an asset that can reduce overall portfolio risk, but also increase expected portfolio return. And that's what I think North American sports with an alpha generating manager can provide to individual and institutional investment portfolios.
Well, and that's certainly why we are a big fan of professional sports, pun completely intended. Obviously, Ian, thank you so much for your time today.
Oh, thank
we
you.
appreciate you being here. And obviously, we look forward to talking to you very soon.
Absolutely. Thank you for the opportunity.